So Lucas, you're taking SmartRent public with Fifth Wall, and I guess, what are the objectives you have?
The first is focusing on our core business, but continuing to add sales and marketing efforts around it. I mean, we have such a sticky business. As we've talked about, we have zero churn, but the problem is we need to make sure we're in front of every apartment decision maker in the US. So the first one is we're just going to enhance our sales and marketing efforts. But what's I think even more exciting is the other two vectors. One is the ability to grow internationally and leave the US in a real meaningful way. We've started doing that today, but we've had to be very opportunistic because of, we have to be good stewards of our capital. So having access to durable capital will allow us to supercharge that growth. And then the third is really around, we have an ambitious roadmap. We want to continue offering services to the multifamily industry. Our roadmap to date has been all things we will build ourselves. But now having access to durable capital will allow us to be selective and go after select M&A targets that we think are going to be accretive day one.
Yeah, and from my perspective, Lucas will have the capital heft and the brand recognition in the market to move quickly on hiring to expedite product development, and will be looked at as a very real M&A player and M&A acquirer for other strategic options.
And how do you think about M&A in terms of the company's growth prospects and now having this new currency in your stock? Like, how does that change your perspective on what your next M&A targets might be and how soon you might pursue them?
Yeah, I mean, I think we're currently capitalized to harvest our organic growth. Having this ability to go public and tap into these markets is going to allow us to totally pivot and focus on near-term M&A opportunities. And for us, that's partly the value we also see in joining and doing this with Fifth Wall is, you are experts in investing in prop tech companies. We together have an incredible roadmap that we've already developed of near-term targets that day one are accretive and supercharge the growth of this company.
And this transaction will fundamentally convey a lot of credibility to SmartRent as an M&A counterparty. Previously, a potential target would have to believe that SmartRent had the interest, had the capitalization, had the board buy-in to consummate a transaction. With the amount of capital that SmartRent will have on its balance sheet, it will be able to really efficiently execute in M&A processes in a very compelling way.
And so there's a lot of different personas of technology products that you could go after, right, to augment your business today. How do you prioritize that?
I think for us, it's around always the core belief of solving a real problem for the real estate industry. That not tech for tech's sake, but as operators, we know where the pain points are. And we know if you look along the resident life cycle from when they start looking for a place to live all the way into leasing and living, that there's still friction in that process. It's still not an elegant process. We've created an elegant process for smart homes. We've created a seamless experience. We want to create a seamless resident life cycle.
And so what that means to you, it sounds like, is kind of end-to-end from how a tenant discovers an apartment, leases that apartment, gets insurance on that apartment, engages with the unit, engages with the property manager. SmartRent has the opportunity through both organic growth, but also through M&A consolidation to aggregate all of that. And the value chain there, I think, is pretty significant.
Absolutely. And what today is a really fraught with friction process could be a really elegant and seamless process.